Alrighty, welcome back to the second half of the Smart Investing Show. Yeah, this is the time of the show when we talk about financial planning. We talk about taxes. We talk about building your retirement for good ways. Financial plan is so important. I mean, I've seen people, how do they do it without a financial plan? I often wondered. But today we're talking about taxes. So, and this is a big one. You may be getting a larger tax refund than you expect. And this is great. What's going on here?
Well, the tax law passed last July, but a lot of the provisions in it were active for tax year 2025. So now people are filing their taxes, and some of them might be getting a larger refund that they were used to getting, or something more. So some of those provisions that were in the law, you don't have to do anything. You don't have to file a certain way or claim a certain way. It's just kind of built into when you file. So like the standard deduction, for example, that increased for everybody, and then if you're 65 or older, it might be even a little bit higher. But that's just kind of standard. You don't have to check. Can you guys hear me? Oh, here we go.
Oh, yeah.
You don't have to check a box or do anything. That's automatic. Something else, the salt cap increasing from 10,000 to 40,000. You'll put in your property taxes, car registration, state income taxes. Usually tax softwares automatically grab that. But that's not something that you have to do. It's automatically going to know to apply that higher cap. Another one is the child tax credit. So that increased a little bit. So that'll automatically apply if you put in your dependent information. So those things might result in a larger refund. There's other things, though, that you might have to make sure that your return is filed correctly. So the tips, if you receive tips, and some of them are not going to be taxable, that you need to make sure that that's being reported correctly on your taxes. Same with overtime. With the W-2s that are being received, some of them might have that income broken out, but it's not a requirement that payroll had to have those broken out. Next year it will be, but this year it's not. So you want to make sure that if you earn overtime, if you earn tips, do you qualify for those deductions, not including that in your income, but also you have to make sure that you're filing that correctly. Another one is the auto loan interest. You're not getting a 1098 necessarily like you would with a mortgage. You might just have to go to an auto loan statement, see if you qualify for that, and then make sure that's included. So all of those things might result in a larger refund. Some are automatic, but some you might need to make sure it's reported correctly.
And one thing I noticed on this really seems to benefit the middle class, because you always hear, oh, the tax cuts are for the rich and all the rich could benefit. Well, no, there's a thing called, is it magic?
Maggie.
Yeah, I was going to say it's magic, but it's not magic.
Not magic.
It's not magic at all. Maggie, which really shows that this is for the middle class Americans. That's going to benefit them the most.
Most of the things that I mentioned do have adjusted gross income limits or modified adjusted gross income limits. That's what Maggie stands for. So the extra $6,000 deduction for people over 65, that has an adjusted gross income limit that starts to get phased out at $150 for married couples. The SALT cap increased up to $40, but that starts to get phased out when income exceeds $500,000. That's still pretty high. The child tax credit, that starts to get phased out as modified adjusted gross income exceeds $400,000 for married couples. The auto loan interest, I think that one's $200,000. The overtime and tips, they have income limits as well. So all of those things do have income limits. So yeah, people that are in that 10, 12, 22, even 24% tax bracket, that kind of applies to those people. So depending on how many of these things that you qualify for, you could get a refund of a few $100s to a few $1,000s more than what you're expecting.
The other thing I want to point out with this is, a lot of times people gauge changes to the tax code based off of their refund. And that's the totally wrong way to do it. It's like, oh, this didn't benefit me. I had a $3,000 refund last year. Now my refund is, $3,200. So it wasn't even that big of a deal. But you have to understand that the refund is just an equation of how much taxes you owed versus how much was withheld throughout the year. And you could have had something happen last year where maybe you had capital gains, dividends that were higher than the previous year. So the way to actually gauge if this is benefiting you or not benefiting you is your total taxes paid, not the refund or lack of refund, I'll say.
Yeah, exactly. So and you can find that looking on your tax return. Federal and state, it's going to be like on the second page. You'll find adjusted gross income somewhere. a deduction, and then you'll find taxable income, and then after that it's going to say tax liability, and that's the actual amount of tax that you paid. And ultimately your refund, like you said, Chase, is based on how much you had withheld throughout the year. But that tax liability, did that increase or decrease? Also, how did your income change? But the next thing I was going to say is, if you did receive a larger refund, it may be worth adjusting your withholdings through payroll, starting right now, so that your paycheck gets larger for this year, so that you're not waiting for next year's large refund. You can kind of get that benefit sooner by adjusting your payroll and having a larger take-home pay.
And there was like no sunset provision on this. I mean, I didn't hear any time it's good for this year and next year.
Some of them do. Some of them
limits
do.
on them?
Some of the provisions here are active for 2025. So what we're filing right now, tax year 26, 27, and 28. So some of them have 4 years. And then, within that time, we'll see. For example, right now, one of the things that did not change that was supposed to change were the tax rates themselves. So the tax rates since tax year 2018 have been 10, 12, 22, 24, 32, 35, 37. Starting this year, they were supposed to sunset or increase back to what they were, 10, 15, 25, 28, 33, 35, 39.6. But that did not happen. So that was something that was supposed to sunset, but it never did. So these provisions, maybe something similar like that will happen, where it's only supposed to be for 4 years. But, when we get there, depending on the administration and Congress or whatever, those could be extended.
I think
also.
some of them is like the auto loan thing. I think is temporary. It could sunset. I think the Social Security or the extended deduction for seniors, I think, is temporary. I think there's
most of these things I think are temporary.
Yeah.
Mm-hmm.
But I think the tax rates, as you said, were now
The
signed into
tax
law.
rates themselves now are
Permanent.
permanent. I mean, nothing's permanent, but they're not at this point expected to change until action is taken to change them.
And I just want to say one more thing about your refund. My personal goal is to get a small refund each and every year. I don't like to obviously have to pay come tax time, because also that could mean maybe I under withheld and then there's penalties and interest. Definitely don't want that. But the larger the tax refund, all that means is you give the government a 0% loan for the amount of time that they held your money. So don't think a good refund is a good thing.
Yeah,
Right.
I want to owe money.
I don't like that surprise.
Not too
but
much
like,
with
yeah.
a penalty, though. You don't
Well,
want
I mean, I've got a pretty good handle on it. So
I want to be somewhere within owing 100 to getting 100. That's kind of the end goal.
and we talk about this because a lot of people, they don't use a tax person or CPA. If you don't know this, you're going to miss some deductions. You're going to miss out on things. You got to know.
I mean,
something.
yeah. So again, with the tips, with the overtime, with the auto interest stuff, if you had tips or you had overtime, or you paid on auto interest, that doesn't necessarily mean you qualify in the first place. But if you do qualify, you want to make sure you're getting that full benefit. So, working with a tax person, or just being on top of it yourself, or working with somebody like me to make sure that you're getting all the information that you need and it's also being reported correctly.
Exactly. Well, Harrison, thank you very much. Again, Harrison Johnson is our CFP, our financial planner here at Wilsey Asset Management. If you want a free consultation with him, go to the website, smartinvesting2000.com. Again, that's smartinvesting2000.com, or give a call to the office, 858-224-0004. Again, that's 858-224-0004. Thank you, Harrison.
Thanks, guys.
All righty.